takes us to our talk of the tape, the last of the mega caps to report, and just maybe the most important one yet, given the hype around AI and what this stock has done this year, as we just told you. The question now, can that record run continue? Let's ask Odyssey's Jason Snipe, Joe Terranova of Virtus. Both are CNBC contributors and own the stock, and top-rated chip analyst Stacy Rasgon of Bernstein has an outperform on it and a $675 price target. Stacy, I begin with you. The most important thing to watch for in OT is what?
I mean, there's only a few things to watch on this print. It's a major print, but it's the data center number. Where's the data center number in the quarter? Where is it in the guide? So, like, from the print itself, those are the only numbers. Like, it's so big that nothing else in the income statement or anything really matters, right? I think when we get to the call, there's other things. Beyond just the numbers, we'll want to hear. There's a narrative as well that goes along with the numbers itself, right? We want to hear anything they can tell us on their visibility. Like, where investors are getting nervous is just the numbers are getting so big so quickly, they're worried about sustainability. So anything they can tell us about sustainability into next year and then even potentially into 2025, anything they can tell us on visibility, anything they can tell us on how they know these parts are getting used, anything they can tell us on supply versus demand. I think on top of that, the other thing that people are looking for is China, because clearly the export controls have limited their abilities to ship their current products into China. They are supposedly developing new products that will be able to be shipped, and people want to know if we should be writing China completely off or not. So anything they can give us on that will be important. But when the actual paper hits, it's the data center number. That's all that matters.
All right, Joe, sustainability, interesting word that Stacy uses. I think that's apropos here. How much better can it get? They've wowed us so far over the last 2 quarters. What can they say this time that's going to live up to that hype?
Well, that's the challenge that you have if you're trying to invest or trade off of a quarterly earnings report. 15% of the S&P 500's performance year to date is attributable to Nvidia. So without question, this is the stock market MVP. The problem is that the expectation now is always beat and raise. Beat and raise is what they must come in and do. It's like you go to a restaurant and the chef keeps bringing out the best dish that he could serve you. Sooner or later, there's going to be a fall off in the meal that you're being served.
I'm going to fight you real quick, right now. Do they really have to raise? I mean, how much more can they possibly raise? They gave you guidance that was so stratospheric. Maybe they just have to say, you know what, we're on course to meet the guidance that we already gave you. They're going to raise again?
So I actually love the way you describe that, because that speaks directly towards how you should own this stock. There's a lot of volatility surrounding earnings reports. Let's statistically put that into context. Tonight, options are implying a 7.5% post-earnings move. But here's something that's very interesting. Over the last 20 quarters, this company has beat on earnings 19 times out of 20. They have a streak of 18 consecutive quarters of beating on revenue. In the 19 of 20 quarters that they've actually beaten, guess what? 14 times the stock went up, 6 times the stock actually went down. So do not be surprised, to your point tonight, that they come out, they beat and raise, it's a spectacular number, and the stock goes down.
That's what happened last quarter, so I won't be surprised.
But what you want to do is have a steady hand.